joined from our Melbourne studio by Dale Gillham. He's the Chief Analyst at Wealth Within.
Please welcome finance expert Dale Gillham to Studio 10. Finance expert Dale Gillham from Wealth Within. It's nice to see you.
It's amazing listening to a professional trader who's doing what you're aspiring to do and hearing it firsthand.
Too many people ring me up and say, hey Dale, I want to make quick money, but it's not about getting rich quick.
I think we can go for about 4 hours, but I'm not sure my wife would like that. So
I'd say congratulations for putting your time and effort out there, because you probably don't really have to do it. You're successful traders in your own right.
Thank you very much for opening up my mind with trading.
So of course you can succeed, of course you can, and you're the only one holding yourself back or succeeding, and that feels very empowering actually.
A quick reminder before the show starts that this live stream is an educational tool, and as such your personal circumstances have not been considered. You should always seek independent financial advice before making any investment decisions. The content of this stream cannot be considered personal financial advice. If you have not done so before, please pause the stream and read the disclaimer. We hope you enjoyed this week's show.
welcome to Wealth Within Live, the stock market show where we take your questions live and give you all the answers about all things investing and trading. Now, to take you through tonight's show is our senior analyst and trader, Janine Cox, and I'm Dale Gillham, the chief analyst here at Wealth Within, Australia's most trusted stock market educator.
Hi everyone. Tuesday seems to come around so quickly, doesn't it? And tonight we've got a lot to share with you, including our thoughts on the market, stocks, and all things trading. We look forward to answering all of your questions, so be a participant and make the commitment to yourself to get more out of the show by asking questions that matter to you.
Now remember, to us it doesn't matter whether you're a complete novice, a beginner in the market, or an experienced trader. Every show is about sharing with you our knowledge and our experience, but more importantly what you told us that you need. Now tonight, as always, our goal is to share with you how you can become more profitable in today's markets.
We've seen just about everything when it comes to the market, so whether you want to know about a stock or you have a question about trading or investing, share it with us and we'll give you our decades of experience and our expert opinion. Every week we'll share how you can avoid costly mistakes and make more profits.
Now remember, there's a chat box off to the right of your screen where you can ask us your questions. So, okay Janine, you can take things from here.
Okay then, thank you. Tonight we're going global. Not only will you hear our thoughts on the Australian
from our
market,
Melbourne studio
we
by
want to show
Dale
you what's happening abroad. So let's get into this first whilst you send in your questions for us to answer. So let's bring up the charts now. Okay, there on the screen you can see the DAX. Now the European markets have been impressive, haven't they, looking at what's happened over time. So we've seen a bit of a correction on this market back into December 2018. Like our market, it had a correction and then a rise out from that. So this is the monthly chart. Now, you know that we've been training you to look at the long-term first, the long-term picture. Now, one of the reasons why we look at these big picture charts is to get a broader perspective on what's going on. So you can see with the DAX, similar to the Dow, if you've ever seen a chart of the American market, which I'm about to show you, it's actually traded to new all-time highs post the GFC. So this was actually the high during the GFC, and we've seen it take off since then. Our market, though, has been a lot stronger than the German and European market of late. So that's something interesting to note. Next, move to the Dow Jones. So we've seen the Dow make incredible heights since it made the all-time high in November 2007 and then continued to new all-time highs in 2013. This market can be quite volatile at times, but it does trend well. So what we look for is a signal from the Dow over time, whether we're tracking the Dow or are we moving different to the Dow. And every week when we have our investment meeting, we often put a different graph on which shows the Dow overlaid over the Australian market so we can see how they're tracking on a shorter term perspective. Because short term, while the Dow does track our market, it often will move in opposition or in a different motion, if you like, to the Australian market. But over time, our markets, if you're looking longer term, over 5-year periods, that our market will eventually overtake the Dow again. So the Dow might overtake our market, and again, then eventually will overtake the US market. And Dale talks about that, I think, in you talk about that in your book, don't you?
Yeah, I do talk about it in the book, and there's a chart in the book, or in my book, Accelerate Your Wealth, that it compares the US and Australian markets, because everybody thinks, the US market outperforms the Aussie market, and it's really one of those myths or fallacies that it swings and roundabouts. And what I talk about, it's like having a bouncing 2 balls in your hand, and you drop them, and they both bounce at the same time. Then they get out of sync, and then they go back into sync. And that's just like us with the Dow over a period of time, like what Janine was saying. So sometimes they'll outperform us, other times we'll outperform them, but eventually we sort of come back to the same sort of momentum.
Good explanation. Thank you for that.
Thank you. That's pretty good. I've practiced that for many, many years.
So I gave you an opportunity to speak. All right. Now, in 2007, now you'll notice this is the FTSE, the UK market. So it's interesting, isn't it, how this has been different in that the FTSE didn't get through to a new all-time high in 2007 when the GFC hit and came back. But there was this similar sort of really volatile zigzag pattern that we actually witnessed on the Dow. Just flicking back there quickly, I'm going to show you briefly what happened during that period. You can see that almost zigzag-like pattern happening at the same time. So even though global markets don't always move exactly the same, often when the falls occur, they'll occur around the same times, especially the major falls. And this is where we talk about diversification across different markets as not really being true diversification, because I spoke to a gentleman some weeks ago, Dale, and he had a portfolio, and the advisor had recommended that he have investments over in overseas markets. And then I said to him, well, do you realise the biggest falls actually occur when at roughly the same time on all markets? So how does that really help you?
It's not diversification. Just because you're investing in the US or Europe or somewhere else, it's still a stock market.
Yes.
That's not diversification. I think that's the point. Is it's all part of for you guys. It's all part of modern portfolio theory, which is flawed, and we talk about that in my book as well, about how flawed it is, and in our courses, because it is. It's saying, but you've got to diversify into unrelated markets, and an unrelated market is property to the share market or cash. It's unrelated, not diversifying your portfolio into another stock market. That doesn't make sense to me.
Yeah, I think that's a really good point.
I think there's 500 stocks on Australia to get in trouble with. Don't have to complicate the process by having 5,000.
Yeah, look, good point. The FTSE has been down in December. Interesting, isn't it, how they made their lows at roughly the same time, and since has moved up. Okay, so we've seen the FTSE moving up, but it's been a bit sluggish because of what's going on with Brexit. So, once all of that's been sorted out, then you'd expect the FTSE to track on. The Hang Seng often tracks our market, has very similar moves to our market, but more volatile than the Australian market. So when the Hang Seng went through the all-time high in the GFC, we actually expected the Australian market to do a similar thing. But as you'll note, you'll see shortly, the Hang Seng actually went through the all-time high, and our market has still failed to get through to that level. And that's why we still see some good upside in the Australian market. Looking at the recent movement, been quite a strong rise out of that low following with the US market, but not quite as strong there. Shanghai Comp is another index. It's another Asian index.
How volatile is that?
And very volatile, isn't it? Look, there were some funds during the GFC that actually closed their doors. This is where, while you can make profits in some of these markets that are more volatile, when things go wrong, often this is where you'll lose your shirt first.
Yeah, well, Asian markets are or historically have been more volatile than other markets, especially our market, even though we're a part of Asia. But you look at the Hang Seng, you look at other markets across Asia, we've got a whole lot of them we look at, but they're all more volatile. It's just that mentality in Asia, I think.
Yeah, like with our market, like with the US market, we have seen this sort of strong move up over the last couple of months. Then we've got the Singapore, the Straits Times Industrial Index as the last one for the international market. So interesting that it's done nothing over all of this time. So if we go back to November 2010, it's still trading sideways, so where would you be? This is why it's really important to have a bird's eye view and the bigger picture on the monthly chart. Now, do we want to just quickly move across to our market?
No.
Have a look?
Okay.
You scared me there. Okay, I wasn't expecting that reaction at all. Now, this is actually a daily chart, so I've just got to bring it back.
That.
Now, we've got some lovely analysis there.
Click on the next one.
Click on the next one.
Oh, there you go. That's clean.
Okay, so you just saw some of Dale's secret analysis. Now, looking at the All Ordinaries, you can see there that we've had a really nice strong rise up. Compared to the prior high, if you can think back to some of those charts that I showed you, the Australian market's done really well to recover back to its prior high, looking quite strong. And as we have said in recent weeks, that we're expecting a pullback for a couple of weeks and then a further move up, because this is where we're at, guys. There's the all-time high. We're still below it. Still got a way to go.
Plenty of room, isn't there? Plenty of room
Sure
in there.
is.
Absolutely. So, but
Well, thank you, Dale.
well, let's get off the charts now. So let's get on to something else. Welcome back, guys. But thanks, Janine. Last week we shared with you some research that we do that was on the sectors and indices, comparing the returns, so that we could monitor the money flow in the marketplace. Now, this does alert us to stocks that we need to look for to buy and what we might be selling in the near future. So this week I've actually got something else for you, and this is research on the S&P 500 in the US.
This is really interesting.
Because I got a lot of feedback from last week doing those sectors, because I find a lot of people, they don't look at that. All they're looking at is, they just look at stocks. They go, oh, what stock can I buy? What stock can I buy? And yet, until you sell something, you don't make any money, and it really is, people miss the half the equation. So we're going to go and have a look at the S&P 500 and do a little bit of research on that.
Now, you might ask, why the US market? Well, we can study any market, as we showed before, and that gives us ideas and research into how our market may unfold. Now, we've done the US market as we've solid data back to the 1900s on the Dow Jones, whereas the data on the Australian market really gets a bit unreliable prior to the early 80s. So most of you, if you're opening charts on the market through the software package that you're running, you won't get data prior to the 80s. So Dale, do you want to talk about that?
Yeah. So if we can bring up the graphic, guys, and so we can discuss the findings. So this is we'll bring up a graphic on the S&P 500. Now, what we've got here in that graphic is just showing us returns on the S&P 500, and I'll just grab my sheet of paper so I can read the actual thing. But you can see there, around about 70% of the time, or that coloured line, that top coloured line, is 70.11%. If you look straight up from that, you'll see from 0 to 10%, 24.6% of the time, the US market rises between 0 and 10%, 24.46% of the time. So 70% of the time, it goes between 0 and 60% growth. So if you look right to the right, you'll see 50 to 60% is 2.72% of the time. So 2.72 percentage of the years that unfold, you'll get a return of 50 to 60% on the S&P 500. So, as I said, 0 to 60% is 70% of the time, and as you can see the bottom line there, it says 98.91%. Returns will be somewhere between minus 30% and plus 60%. The interesting thing is, and this is really suggesting to why, it really does get to me, is that why you don't buy and hold.
Yeah.
Because if 70% on 2/3 of the years, over 2/3 of the years, you're going to get a positive return from 0 to 60%. Those 1/3 of the time really kills your portfolio, because if you get a move down at 30% or minus 30%, you're going to make up over 40, I think it's 47% or something, or 50%. Roughly.
You'll have to make up more than that.
You have to make up more than that, actually. So if you lose 50%, you've got to make 100%. So it's a huge effort to make up, and people tend to buy and hold a hell of a lot in terms of they just don't know where to sell. And it's one of those common things that we get, that I don't know where to sell. And this shows you that 2/3 of the time, or more than 2/3 of the time, the market's in positive territory. So how can you not make money out of the market? And when people say to me, oh, the share market's gambling, I can't make money out of it, this says to you, it's pretty easy to do that. All you got to do is get rid of stocks that start falling.
So what you're saying is, whether it's the S&P 500 or the Australian market, the pattern will be quite similar.
Correct.
And it's about having a good look at the big picture and understanding that, so that removes some of the fear out of the market and then gets you thinking about, well, what is the right strategy?
Yeah, and that's the thing. It's about portfolio construction, getting the right stocks and understanding what's happening. Like with the banks in Australia, we know they were down for 4 years. Now, if you go and research the banks, that 4 years down is pretty rare for the banks. A 4-year stint just kept falling. So therefore, the chances of the banks being up this year is fairly high. How high they go is another different question, but having a fifth year down is very, very rare territory. So in my next bit of research for next week, I'm going to look at the top 20 stocks and show some great research on those. So it's quite interesting stuff.
So if you like BHP and stocks like that, then you better pay attention and be there next Tuesday. We're going to talk about it all.
We do that a lot. We do sorts of research like this a lot. And the reason why we do it is because it gives us a hell of a lot more confidence when we make calls. Now, a lot of people go, well, why did you think that? Or you were right on that call. And early in my career, a lot of people said, oh, that's a big call. You know, you're saying the market's going to do this, the market's going to do that. But the thing is, by doing the research, you get the confidence to know that you're going to be right 70% of the time. So, and that's pretty good when you're trading. If you're not trading very, very well, it just means you just don't know enough and you haven't done the research and haven't earned the right to be a trader. And what I mean by earning the right to be a trader is somebody who's put in the time, got the knowledge, put in the work, done the research, the back testing and everything else that says to them, I know with very high probability if I'm looking at the market today, I know what it's going to do tomorrow and next week and next month. And both Janine and I know what this market's going to do this year and into next year with pretty high probability. And we don't get it right all the time. That's just the way it is. But we get it right most of the time. And if you can get it right most of the time, you can make money. So that's really good, as I said, really good research from them. We've got some more. So I know that we also conducted some YouTube polls each week. So we did that the last 2 weeks. Yeah, that's
been really interesting.
So
Thank you for participating, everybody.
Yeah, it has been. And this week's no exception. So we've done another poll and we're conducting these to learn a little bit more about you so that we can tailor our content to suit the level you, our viewers, are at. So I have some more interesting insights to share with you tonight.
Before we talk about the new poll, were there any changes to the data from the other polls?
Yeah, and I just went back to last week's poll, and so for the question, I'm currently trading passively, actively, not trading or looking to start trading. There was a little change in that we have 5% indicate they are not trading now. Those trading passively was down to 41%, so that was down a little bit because that was at 44, I think it was.
Right.
And those trading actively was down a little to 43%, while 11% were still looking to start trading soon. So
it hasn't changed a great deal.
Hasn't really changed a great deal, but as we said last week, it really didn't surprise us too much about those statistics.
Now this week, given we've got so many beginners and more passive investors, we thought we would ask you a question related to that. So this week's question was, start investing in the stock market. To start investing, I believe I need how much capital? Now, the options were $500, $1,000, $2,500, $5,000 and over $5,000. Now, that's an interesting question. So what came back?
Well, I don't know about you, Janine, but the results of this really were quite interesting to me. Now, you had 12% of people say $500 and 36%.
Gee, that's low, isn't it?
I know, it was really, really low. $500. There were 36% said $1,000. So 48% of them said $500 to $1,000. So 48% of you said that. There were for the $1,000 or less. So then we had 16% say $5,000 and 32% say over $5,000. So 32% of another third of you are saying you need more than $5,000. So that's 48% saying $5,000 or more. And the last 4% saying $2,500. That's what they need.
Great if you've got over $5,000.
Oh, absolutely.
Because it means you can start with, better portfolio. But you can start with a very small amount. Do you want to explain?
Yeah, well, in my book, I talk about whether you've got no money or very little money to invest or whether you've got a lot of money to invest, how you actually go about the process. And all too often I find people sit back and they wait. They go, I don't have enough money to get into the market. And often when they ask me the question, say, Dale, how much do I need to get in the market? The question's not coming from the actual figure, what's in the bank account. It's what, in their mind, they think makes it worthwhile to invest. In terms of how much growth can I get.
In a way, it's good because they're also thinking about, what's the brokerage cost?
Well, no, they're not thinking about the brokerage cost. It's more about how much money can I make to make it worthwhile. In today's society, we've got this instant gratification. Now, I just pick up my phone and go, okay, now I know what the movie is. Yeah, I know I can order, I can get Uber Eats, I can do everything instantly. So people think if I put money in the market, how much money can I make as quick as I can? So, because when I start asking them more questions, that's really where it's coming from at the moment. So, but it isn't not where you start. It's important. It's where you finish up. So in my book, I'm talking about, $1,000. Just start with $1,000, put that into a big blue chip stock. And if you don't have a lot of knowledge, you just buy one of the top 10 stocks on the Australian market, and then you save up another $1,000. You put it into that, and then another 1,000. When you get to 5,000, then you might start adding a little bit more to the ones you've already got. And it's a really simple process. But one thing I know for sure is if you don't start, you don't get. You're never going to finish. So it's about starting, and that's the biggest thing. So I don't mind whether it's $500 or $10,000 or $100,000 with your start. It's just getting started. So
ideally, though, if you want to get started, you want to have the knowledge first before you put the money in. So
yeah, correct.
Where's the money better invested? Is it better invested in shares, or is it better invested in learning how to do it properly?
Well, I always say don't put the cart before the horse, because that's a bit silly, and a lot of people do the opposite. They start trying to trade, and and I covered this on my YouTube market wrap yesterday. I was doing the top 10 stock tips, or 10 tips for getting into the stock market, and one of them was about that sort of stuff. Is people say, I don't have any time or any money, but then they'll spend 10 hours a week surfing YouTube and trying to learn things, and then they'll put 10, 20, 30, 50, 100, 200,000. And I've even had $1 million portfolios. People say, I don't have any money, I don't have any time, and yet they're spending 20 hours a week, and I've got $1 million in the market.
Yeah, how does that happen?
And to me, that's a bit of an oxymoron. You do have the time and you do have the money. You're just not valuing what you're doing properly, and that's what I see.
One of the things that I find amazing is that in Australia, and I don't know if it's the case all around the world, but we seem to have this belief about investing in the stock market, and you know how long it takes to be qualified in something. So to be trained to be a tradesperson, to be trained to be doctors, teachers, lawyers, whatever it is that you do. But we don't seem to invest in the education on the share market.
The share market's
thinking
easy.
we can just throw some money at it and make some money out of it. But the saddest part is that people work hard for their money, or you may be sitting there thinking, yeah, that's me, or my job's easy and the money comes easy. I work too hard
for my money. So, yeah.
And then what you actually put aside to be able to save is only a very small amount in theory that compared to what you actually earn by the time you pay all your bills, etc. So that little small amount that you save is like gold. But why don't we treat it like that?
Well, we should. We should treat it like gold and actually build it up, because a lot of compounding takes over. So, I mean, we could do a whole show just on this, completely just on this, and there's lots of subjects we could cover.
We've got lots of questions.
We've got a ton of questions coming through, so thanks, guys. I'll get to those in a second. But as you know, I've got several more polls I'd like to conduct over the coming weeks, designed so that we really do understand you, our viewers. So remember, if you're watching, just go to click on the community tab on our Wealth Within YouTube page and enter your answers into these polls, because it really does help us. So it keeps the content not only interesting but relevant to you and at the level that you really do need us to be. So now I know we've got some emails here, Janine, somewhere. So how about you have a look at one of the emails and bring up a stock from the email, and I'll have a look at the chat forum while you do that. How's that?
Okay, well, what about this one here? As you know, I've several more.
You got one from Sean, is it?
Is it Sean?
Yeah.
Okay. I love the new YouTube show. Here are some good quality companies to look at on the share show. Hopefully better than the risky ones on the last show. What are your thoughts on TCL weekly chart? Do you feel it's ready to break above its December 2017 high and continue in an uptrend? Another is MND. It's having a breather before heading higher. So let's have a look at these two shares.
Will you bring them up, and I'll read a couple of the things. We've got Michael Butler wants WTC WiseTech. That's one of those whack stocks. They are learning quite a lot, so that's great. Thanks very much. Great book. Thank you very much for the feedback, Michael. Mark Williams, I don't think I've seen Mark's name on here before, but g'day Dale and Janine. Challenger, buying opportunity to avoid. Talk of being taken over by a Japanese partner, upping their holdings, so we can have a look at that. Hi everyone, we're looking forward to John Granger. Hi Dale and Janine, signed up for your short course. Oh, well done, matey. Thank you very much. Looking forward to starting the course. Looking forward to helping you make money, John. So there, Todd's going, g'day Dale and Janine. API is on a slow burn since I bought in February. How much more room do you think it has? Notice Combank and Colonial Mutual into it. Thanks, Todd. So I'll read a few more in a minute, but how about we go into this one?
So we've got the chart up there now. Now we're looking at TCL. We can see, now I've put both the monthly and weekly side by side. This is the standard format that we use when we're analysing a stock. Doesn't it look good now that it's broken to a new all-time high? Now what's interesting is that we're actually expecting it to pull back and make a low around this time, because the number of weeks up, typically a stock moves in cycles and has a pullback around this time, but it actually continued to rise. So where is the peak coming? That's the question. But it looks like it's charged ahead. So, yep, very nice looking stock at the moment. If you're not in it right now, then I wouldn't be jumping in. That's just my opinion. But it's about looking at your risk. If you did jump in, then how are you going to manage your risk with a stop loss, or using a technical tool on the chart to be able to manage that? Now, moving across to MND, Monadelphous, again on the monthly chart, you can see how nice a pattern that has created on the monthly chart.
That's beautiful, isn't it?
Now, in Module 5 of the diploma, we cover patterns, and that is a really nice little flag pattern on the monthly chart. I know that we don't draw many tools and apply many tools to the chart, but while Dale's looking at something else, I thought I'd just sneak a few in. And here you can see that this is not drawn perfectly.
I'm reading all these awesome comments.
Excuse the accuracy of my lines here. So looking at that, you can see that this is the type of breakout from a pattern on the monthly chart, a consolidation. Often the important thing about these patterns is where do they form? That's what we consider when we're looking at the chart. And when you see a pattern like this, often it's in what we call accumulation, and the stock then rises out of it. So we've seen that nice strong rise. With the market pulling back gently, it's pulling back gently, so nice and resilient. It may come back for a little bit further before we see it settle down. But if you know, this one looks like it's a really good stock to be in if you're in it now.
Oh, fantastic. So let's bring up the next one that we've got. So that is it looks like our next question is by Mick King. So Mick says, "Hi Dale and Janine, got a couple of companies for tonight. If you can, SDA Speedcast, if it can break above $4, and I think MGR Mervac is looking pretty good. Looking forward to tonight. Thanks, guys."
Okay, so SDA, Speedcast, it rings a bell, and I'm not sure if this is because one of the students that I'm working with at the moment has been doing analysis on this. It's possible. But look at the stock. It looked like the perfect trade to be in when it was trading up here in 2017, only to reverse so strongly in August 2018 when the rest of the market turned. Now, if you actually study the market and remember the chart of the All Ords and how the market fell during that time, I just want to show you something quickly so we can see how far this stock has fallen.
Massive
now,
fall.
the market and bigger stocks fell around 15.5%, whereas a smaller company like Speedcast has been exposed to a 57% fall. This is the sort of thing that can happen. They can just fall out of bed, these smaller stocks, which is why it's much better if you don't have the knowledge and experience to stick to more solid stocks that tend not to move in this way. But looking at it, what concerns me, I guess, with this share is it's taken out these important lows here when it's traded down here. It's broken all of that, what we call support, and it is trying to push back up, but it's going to meet some resistance at around 445, 450 when it tries to come back up. So it may try to do. Let's have a look at the weekly chart just quickly. It is trying to make its way back up. So look, if the stock trades above this high of 395, then we can expect it to head somewhere in the vicinity of this 450, maybe $485 to try to claw its way back up. If it falls back below this low, I'd be quite concerned about the stock.
I would be too. So what was the other one? Mervac?
Yep.
MGR. Cool.
For some reason, it's not responding.
You're going to have to go really fast tonight because we've got lots of stocks to talk about.
Okay.
That'll be hard for you, going fast.
Look, for some reason, it doesn't like my my touch tonight. It's not responding at all.
Doesn't that look nice?
Mervac looks incredible. It's just moved up nicely, as with some of the property stocks. So if you've got a property stock or two in your portfolio, it should be doing quite well like this one. So who'd have thought with property being down that the property stocks have risen? But this is more about commercial side of property. And the banks, while they've been down, I guess the institutions are looking for somewhere to put the money because, okay, while the banks are still paying the dividends, they're not providing the capital growth. And this is what we're seeing now with the property stocks. Now, these stocks generally go ex-dividend a couple of times a year, and we see that towards the middle of the year for some of these stocks. And so that's what we're expecting. And often the stocks will rise. So it's good to have a look at what the stocks do prior to the point where they go ex-dividend, so in the months prior. to see if the market's responding to that news that there's going to be a dividend paid, because then that'll tell you a fair bit. And then have a look at what happens after these stocks go ex-dividend. Do they tend to fall a whale up? So that's MGR. So it's looking quite positive at the moment. But like I said before, right now, given it's had such a long run up for so many weeks, if you're not already in the stock, then the risk is that the support below is quite a way below. Let's have a look at that just quickly before we move on to the next stock. So it could be, it could come back at some point to test support around this sort of level. So Mirvac holding up nicely, looking strong. Could continue to rise above the $3 mark in the short to medium term.
All right, so do you want to type in WTC? We'll come back and I'll just read some more of the comments off my trusty iPad. So WiseTech
Global.
That's from Michael Butler. So, and John Granger wanted AGL. And then we got Todd. No, I've already said Todd. He says, what have we got there? API. So you can type that in as well. API, so do that. Guy Cahill says, hi Dale and Janine, could you please look at AZJ and GPT? Let's do those for the minute. I'll look at some other questions. Ian says, hi, great to see you again, Dale and Janine. Thank you for taking the time to these live sessions. I hope to be a diploma student in the very near future. Oh, fantastic, Ian. Looking forward to supporting you. Chili Dude says, share trading is bad for my health. Wow, you must be doing it the wrong way there, matey, because it's really good for my health in terms of that. Just means you're not doing it the right way, probably, so you do really need to make sure you have some solid rules around all of that, Chili. So love to chat to you more about that. Where are you at? Well, you're looking at my iPad now.
Okay, I've got WiseTech.
Oh, sorry, WiseTech.
Up there. So we're looking at WiseTech on the monthly chart at the moment. Now you can see with WiseTech, really nice trend all the way moving up. It's still looking good right now. This month's bar is showing it's closing at around 22.53. So it's really pushing up towards that all-time high of $25. So this is the sort of thing you want to see on the monthly chart. Knowing where it is in the big picture, meaning that it's still moving up, is a really important thing to see because the momentum's still behind it. Sometimes when stocks trade towards their all-time high, they can turn before the all-time high. So we saw this reversal bar occur on the 22nd of February. Note how the open was up here, the close at the bottom is a sign of a reversal, but it recovered. So that's a really good sign for the stock, the fact that it has been able to do that. So it's more likely at this point to trade through that high. However, if it pulls back and goes below this low, then that means, it's going to have a breather on the downside for a while.
And this is one of those whack stocks that I was talking about in my market report for last week, the win in our e-news, so the report I write for journalists.
Okay.
So I talked about the whack stocks and how the whack stocks in Australia outperform the FANG stocks in the US. So the 5 big techs in the US, the FANGs, Facebook, Apple, Amazon, Netflix, Google, I think that was it. Did I miss one? Yep. I can't remember. And the whack stocks are WiseTech. It's also Xero. It's Afterpay. I can't remember all of them, but they outperformed the FANG stocks, or have been this year so far. They've done really, really well. They're quite good. Pretty much the best one of those is looking is Xero, is the really nice one.
Okay.
It's probably the nicest one, but some of them are still a little bit too low cap for me, and I'm not suggesting they're going to perform as well as the FANG stocks over a longer period of time, but hey, they're looking good. They do look good, and I think Australia's getting a lot more stocks into technology, which is about time. Instead of us being top heavy in the banks, if we looked at the top heavy sector, our market's always been financials and materials, BHP, Rio, that sort of stuff. And so it's good to see other stocks coming into it to really start to change the makeup of the All Ordinaries Index, and hopefully change the makeup the top 50 to top 100 stocks. So, but let's go back to another question we've got. It's one from Nubia. Nubia says, hi guys, thanks for the videos. I finally caught up with both shows. I'm getting into trading again after a long pause. So well done. Great for getting back. And this way is helping to ease my way back there. So I'd forgotten how important it is to look at the big picture first. Actually start applying all the tools to the chart. Everything is coming back to me. Also started with Mastering the Market. Oh, fantastic. A student of ours starting. He's one of our graduates. And so great. If you need help, guys, that's what Janine and I do. We're here to support you. Also, Nubia, sorry. We're here to support you, so you know how to talk with Janine and I, so we can mentor you through. and get you really back into trading there. So let's now go into, I want to talk a bit about something else. I'll get off the charts and I want to talk about something else. So we do get interesting ideas all the time, and we do look at different research. And one of the interesting things we wanted to chat with you about, actually, Janine brought this up, and she said, I want to discuss with everyone tonight about brokers, because everybody's like, I always have this great joke that brokers are aptly named, because that's what happens if you use brokers all the time. But it's a bit of a joke, and it's not necessarily correct, because there's brilliant brokers out there, and there's some pretty ordinary ones out there. But Janine's done some little bit of research, and she's going to discuss broker recommendations.
Yeah, more from the point of view that, look, we get a lot of reports coming out to us. So it's not so much that we're going to be looking for what their recommendations are. It's more, well, what is the rest of the market seeing or thinking? That's what we want to understand. And just to get a bit of background sometimes on what's happening with stocks. So looking at the broker reports that we have, you know, they'll just have information on market capitalisation, you know, how big the company is, the share price, some of the fundamental data, the view from the broker on what they see going forward with the stock, may have some earnings data to talk about, looking at their debt situation, even depending on whether that's relevant or not, depends what industry they're in. So it can be quite interesting, and I'm reflecting back to what Dale was saying before about some people who are spending hours, you know, looking online for stuff and reading broker reports and somehow not getting the full picture because they're still not looking at the chart. So you can be looking at these broker reports, seeing a recommendation to buy or add, and yet the share price is falling. Why is that? And I mean, I guess one of the reasons I brought this up was because many years ago my mother was into the shares, and she had a broker, and the broker would ring her and recommend a stock to her, and we actually caught on to it really quickly and started to just observe the recommendations that he made to us and what the stocks actually did after he made the recommendation to us. So we didn't have any charts or anything like that.
Nothing like that.
We had nothing to look at, but we just watched the share price in the paper to see what would unfold. But the advantage you guys have got these days is you can actually look at what's happening. So if they're telling you to buy if something is a buy or an add, well, if the big money's not behind it, why are you recommending it to me? You know, do you know something that the rest of the industry don't know? I mean,
yesterday, just while we're talking, can I get the guys to give us the stock codes of the two stocks? So, Jack, if you're listening, can you grab me the stock codes for these two stocks? Because I forgot to write them down. I stuffed up.
Volpara was one of them. So VHT is one of the stocks that was on the screen, and the other one was EHE, I think.
EHE.
T.
He's going to work it out.
Sure,
anyway. We'll bring up the charts for you in a second.
It wasn't so much important what the stock was or what the code was or anything like that, because it's more about the thinking or trying to get you guys to think when you receive some information, one, why is this information coming to you? If it's free, why is it free? Like, why would a broker be recommending this to you? Of course, they want you to transact. Now, brokers have different classes of clients. So clients who are, getting free information are getting information potentially later than much later than when people who are paying for the information are getting it. And it may be different stocks that you're getting. And I'm a bit of a skeptic too, because I sometimes think, well, why are you pumping up this stock at the moment? Are you trying to get some support behind it?
Yeah, they do that, and they get extra bonuses for doing certain things. They've got their own accounts, in-house big accounts too, that they trade as well. They do a whole lot of things, and I know I've talked about floats numerous times, and we talk about it in the book as well about floats. They're paid to pump a stock to get it floated. So, and it really is, it's about the whole adage that the ACCC pushes out, buyer beware.
Yeah, look, there are some really good brokers, like you said, that are really are different.
Brokers.
They're not just transactors, but a broker, you've got to understand, well, like, what is an accountant an expert in? What is a financial advisor an expert in? What is a portfolio manager an expert in? What are the brokers experts in? They might have training to be a broker, but may not have training to be an expert in portfolio management or tech or the sort of stuff that we do. They might not be trained in. So It's really important that you understand that. And then, as I had a conversation today with a gentleman, it's about the quality of the question that you ask determines the quality of the answer that you get back from people. Another really important thing. So.
Yeah, it is. So to me, it's like real estate agents. I often say to people, "Do you trust the real estate agent?" And people go, "Well, no, not really." And I go, "Well, why do you trust a broker?" Because they do exactly the same job. It's a person that connects the buyer and seller on an asset class, whether it's a property or a share. It's irrelevant. But so why do you put so much faith in a broker where you don't in a real estate agent?
I like to comment that you once said, "Well, who has your best interest at heart? Who is the person that has the..."
And you.
And it's you. So if you go into this situation with some knowledge and you have a bit more understanding of it, you're going to be able to see through some of this.
So let's get Jack to bring up a couple of the first image of the broker one.
Okay.
And then we'll bring it up on the chart. So we've got EHL. So you want to bring up the chart of EHL quickly. So we'll just have a quick look at what they're recommending and then we'll have a quick look at the chart for 2 seconds and just show you the stock so that they are recommending and what it is. So what we're saying to you is, yes, you have to use brokers because you have to, whether it's an online broker with a ComSec or somebody like that, or whether you use an advice broker, all transactions must go through a broker. So you need to do that.
Yeah.
But what it is protect your money and have a process and plan for yourself, because we know that 90% of people that go to the market don't have any plan at all. It's more like a wish list rather than a plan and a structure and a strategy. And, in Sun Tzu's Art of War says, don't go to war unless you know you can win, or don't go into battle unless you can win.
When my mum got me interested in the share market, we used to read the Financial Review and the Shares magazine, and it took us a while to work out that, because we didn't have access
Shares
to all this
magazine.
technology.
That was 2 months old when you got it.
Yeah,
the data.
that's exactly the thing. It took us a long time to work out that everybody, already had that information. I mean, back then we were really naive in the share market.
So this is one stock in the last few weeks that got recommended by a broker, and the other one was VHT. Yeah.
Yeah. So these are all recommendations that have happened more recently, and looking at how it's unfolding. If you're looking at the chart, well, you wouldn't be putting your money in there because clearly nobody else is if it's falling. And the other thing, to Dale's point, was looking at the volume. I mean, this stock, there's roughly 4 or 5 million traded a week at around about $2.80. So you multiply that out. Now, it wouldn't take a fund manager much to move that. So you know that once this gets going, that it would be because there's some bigger money behind it and you can watch the volume. But right now, look at the volume. It's actually dropping.
So you want to put the other one in, VHT? Because we've got to get to the stocks that these guys want to look at too.
Oh,
again, we could be here for 4 hours like we did last week.
Maybe they'll vote next time to extend it.
Volpara, look, that doesn't look like liquid though, does it?
Yeah, no,
really.
You and I looked at this today. So how to tell liquidity is when you look at the weekly chart, you can see if it tends to spend a lot of time trading at the same price, which it has. It's not too bad. Like from an individual, if you were looking to trade, there's around about 1 million units a week. But in terms of dollars, probably more than $1 million a week, which is okay.
It's okay.
But it's still going to be volatile, potentially high risk because it'll move quickly up or down. And often shares will move faster on a downward correction when they do correct than what they have been moving up. So you can see stocks that might take a couple of years to make these gains, 30, 40% potentially, maybe more. And then in a matter of 6 months, they can wipe it all out. So when we looked at this, we thought, okay, this one's been holding up a bit better than EHT. However, for us, there's a resistance level across here. It'd really have to start pushing up through there before we'd be saying that it's going to go through that all-time high. Otherwise, it could come back and test this low. So right now, it's in a sideways move, which is in a holding pattern. So stocks can move up, down or sideways. Simply look at a chart and decide for yourself, is it going up, down or sideways? Now, if it's not moving in the direction that you want to trade in, then you wait until there's some confirmation. Now, you had a question today about confirmation from somebody, and confirmation of a moving up would be when it goes through that high. It's just a really simple example. It doesn't mean 100% probability that it's going to keep going. It means that the probability is much higher for it to keep going once it's done that than to try to enter it while it's down like this.
Yeah. I understand. But the question the person was asking is, can you tell me confirmation on this stock to buy, when you're going to buy it?
Yeah.
And that's not something we're ever going to do, guys, on this show. We're not going to tell you exactly the price and everything to buy, because that's really dangerous. Not because we don't know what we're doing, it's because we don't know you and we don't know your strategies and
your process and your plan. And so just because we might think a stock is a buy, but it could be a buy to me. And my risk level and Janine's risk level are two different things. Where I buy a stock or go into a trade can be different to Janine. It's completely different.
Did you want to switch off the chart now?
Yeah, we can switch off the chart. We don't need these anymore. So, but it really does get down to its personalities. It's what Janine's a little bit more conservative. I'm a little bit more aggressive than Janine. So where I might buy what's confirmation for me would be different for Janine.
I might wait for something else.
Yeah. So, and we had this on Sky Channel for years. People going, well, should I buy this now? We're never going to say to you should buy this now or you should sell this now. We're never going to do that because it's always about a plan, not the specific stock itself. It's about what's your plan. Are you more medium or long term? Are you short term? If we to say this stock looks good and you go and buy it, how are you going to manage it? Because you may not buy it tomorrow, you might buy it next week or next month, and there's more data and we've changed our mind. You know, we're going, no.
Your point in answering those questions, like whether it's short or long term, that your plan is this is not just a plan for the stock. This is a plan for how you're going to trade for your whole portfolio. What's your overall approach? Because I can have two students send me in emails with the same stock, analysing the same stock, and have a different plan to trade it because their portfolio strategy is different.
Yeah, well, the market, or being successful at investing or trading is really about your attitude towards it and the psychology behind it. Because I know I've had tons of times where I've had two people email in or talk to me on the phone where one's saying, wow, I can't find enough money to buy all the stocks that I can buy. And the next phone call is, wow, I can't find any stocks to buy with my money. And it's exactly the same market. And so it is just about how your perception is on the particular stock and what your process is. It really isn't about individual stocks and the exact time you buy or sell, because it really is about the management of it and how you're actually going to do it.
Which is another good point, because if you don't know enough, you'll be running on emotions, more affected potentially by what's happening on the market or what's happening around you, rather than actually purely based on the analysis, which, you know, you can make it as black and white as you like. You know,
you can. And to me, you can't drive a car while you're standing on the sidewalk and letting somebody else pick when you put the accelerator down and put the brake on. You just can't do that. You need to do it yourself and understand why you're buying, understand why you're selling, and how you're going to manage that. So, but that was a really great little segment there about brokers, because I know we do get a lot of questions about brokers. Which broker should I use? Blah, blah, blah. We get all of those sorts of questions. And I always say to people, just use your bank. It's nice and simple. You know, just go to your bank. You've got your bank account.
Your online account.
Your online account, just trade from that. But then you need to arm yourself with knowledge on what you're buying and selling, and not leave it up to somebody else, because as Janine said, it really is, who do you trust the most with your money? And if you don't trust yourself with your money and you want to take other people's recommendations, then you're going to get whatever they give you. And most times the best recommendations don't come out. They're like we talked about with brokers, they're stuff that they're wanting to push. So you're not always going to get the great recommendations.
They can be fine for a couple of months and the stock goes up, but then how do you manage the risk and how do you exit it? And in what context did they say to buy it? Like, or was the recommendation made?
Yeah, and I know I've read research, you know, over the years several times where they've done researching stock tipping reports, you know, across the US and Australia. And the research always comes back that the experts are right about 50% of the time. The really good ones are 60%. The really good ones. So, and I know anybody can flip a coin and be 50% right. It's your money management and your portfolio construction and how you're managing that will determine how much money you make. And that's really, really important. But let's go and have a look. I'll go and have a look at some more. There's just so many comments on here. So I'll throw out a few stock codes here. We've got AZJ and GPT. Guy Cahill, hi Dale Janine, please look at these charts for me. Ramit's got ALX and Newcrest, so we'll do those two. Aurelia says, what do you say about NVL? So you can put that one in and we'll have a look at those. Ian says, great to see you again, Dale and Janine. Thank you for taking the time for live sessions. Oh, I've already read that one.
What was Aurelia?
Aurelia saying NVL.
And the one before that?
One before that. ALX and Newcrest, NCM. Richard Liu says, hi Dale and Jen, I've been looking at EHE, JHC. Both stocks look like they're breaking downtrend in both monthly and weekly time frame. Benny Boy's looking at Brickworks and ABC. He doesn't currently own them, but I'm patiently waiting for a turnaround. Wow, there's a hell of a lot of questions here. Mick King down the bottom says, I know a tip sheet's recommending HSN at the moment. Good grief, look at the chart.
Now, I'm ready to go when you are. I've got AZJ.
Let's go.
So would you want to have a look at AZJ have a look at the chart now? We've got that up there.
Yes.
So again, this is on the monthly chart on the left-hand side. So let's have a look at the whole history. So some stocks don't go back as far as others. Obviously, it depends on when they list on the Australian market. So Horizon listed sometime in 2010.
But that's looking all right.
Now you can see that it's actually still quite choppy. It looks like a potential double top, which is one of the patterns that we look at. But you'd have to any of our students out there, you'd have to check to see whether that fits with the rules for a double top. And has fallen quite strongly. Now, it has started to make a move up. The commitment on the monthly bar is not strong, so we haven't seen any really strong moves like what occurred out of this low here in February 2016. Really nice strong moves out of the low. Here it's been a little bit lackluster, and this could just be because the market's slowing down at the moment, so it could be slowing down with the market.
Okay, next stock.
Otherwise
we'll never get through them.
Okay, GPT, or is it VHT? No, GPT.
GPT.
Okay, so GPT is a property-related stock. It's a stapled security. So this is one, we looked at Mirvac before, so this is in the same category as Mirvac. So you'll notice the chart's very similar to Mirvac. Looks lovely how it's taken off out of this sideways move and is heading towards the $7 mark. And quite interesting how the rest of the market was starting to slow down and this stock has continued to power forward. So good to see this on the weekly chart unfold. I would be really wanting to protect the profit on this stock if it comes back. So it's good to have a trailing stop, and shorter term traders might have a trailing stop underneath a low, or might have a more defined exit. Which if you're out there and you've actually started looking at Trading Mentor, there's a rule in there called Dow theory, which the Dow theory exit would actually be when it takes out this low, provided it hasn't taken out this high in February 2015. We'd be looking to see that rule triggered, and that would mean that there could potentially be more downside. So, but at the moment it's looking good. So NVL, National Veterinary Care.
I've never seen that before.
So this is daily chart, so that's probably confusing things a little bit.
That doesn't look very healthy.
So we have a look at that, and doesn't look healthy at all, as Dale's saying. But according to Dale's book, he talks about trend lines in the book. So Accelerate Your Wealth and How to Beat Your Managed Funds. The managed funds by 20%. That book shows how to apply trend lines in simple terms. Looking at that, the stock's still under the monthly trend line, which means potential weakness still until it actually can manage to get back through it.
Yeah, it's more downside, isn't it, really?
Yeah, so if we saw a move above $2.02, we could see this stock take off again, but at the moment it's not giving any indication of that. So next stock is Atlas Arterial. Looks really good this week. It's been moving higher. So this is a nice stock on our market. It's been making higher highs over time, and we're seeing it now trade through a new all-time high. So again, it's defied the market. And these sorts of stocks, even though they don't have as high a weighting as some of the big banks and biggest mining companies, they have actually helped to support the index as it's we're thinking it's going to go down, but these stocks are going the opposite way, so it is having some sort of effect. Now, we actually thought it was going to pull back. We had this big outside reversal when it got to a new high. It traded sideways, gave no indication it was going to go, and then all of a sudden it's taken off. So over those 2 days it reversed. Sometimes things can happen pretty quickly in a matter of a day or two on the market. So that's Atlas Arterial. So NCM is another interesting one. So that's a gold-related stock. This stock has been quite interesting over the last few months. What we found interesting was how it actually didn't come all the way back. For those of you who study gaps on charts, sometimes the stock will make a price gap when it's trading, and often will come back and fill that gap, as we talked about on one of the sessions, I think it was a couple of weeks ago. Now, Newcrest didn't actually go through and fill that gap and started to trade up. Now, it moved up around 8%, I think it was, in this particular week, and then it was quite close to this high, but it's taken its time getting there. It still looks good, and if you're holding it, then you'd be pretty happy about that one.
Absolutely. So is that the last chart? Yes.
Have you got another one?
Well, no, how about I've got another question that was emailed
through.
Off the charts how about you have a look at the chat and see if you can read it, because I've got my glasses, so we'll go off the charts for a second, and we'll have a look at this. I've got an email from...
It would help if you told me where we're up to.
Just anywhere down there somewhere. So There's tons of them, so there's a few we haven't covered. So this one's from a Peter Jury, so he sent it through this afternoon or earlier this afternoon. He said, "Hi, Aldi, read your book and watch you on Tuesday nights. I've learnt so much, especially on what I've been doing wrong." Thanks, matey. That's really nice of you. My question is, what should I do with shares that I have that are 50, 60 and 80% down? Not talking a lot of money investment, maybe $3,000 over 4 or 5 companies. Should I just now let them sit to see if they ever turn around, or cut my losses and sell them? So he's got AVZ, GA, JAT, GMN and SUP. We don't need to look at the stocks that you've got, Peter, in terms of that. It really is, if you're losing 50, 60, 70, 80%, it's about what are you missing out on. It's like you can't be in stocks that are rising in value while you're in ones that are going sideways and down or doing really, really nothing. And generally stocks that have fallen that far, you might find, especially some of those stocks, I'd think, my guess would be they'll probably go sideways for quite a bit of time. So, and given you don't have a lot of money, and I generally say to people, do what your mum always did. If you had a sore and she put a Band-Aid on it and she had to take the Band-Aid off, she just rips it off really, really quickly. All too often we see people hang on to bad performing companies, and they have a trade, they go into what they believe is a trade. They buy this lower cap stock or stock based on a tip or whatever it was, and not really much knowledge. It falls away 50, 60, 70, 80%, but as it's falling away 10, 20, 30%, they go, oh, yeah, if it goes back up again, I'll sell it to where, if it goes back to where I paid for it. And then when it gets 30, 40, 50%, they're going, oh, look, it might get back up to where I paid for it. But as soon as it gets through that 50%, then they're going, it's lost too much money now, I can't sell it, so I'll just hang on to it. And eventually I might make my money back. And that's that whole fear of, I've taken a loss. Now, you don't compound poor decision making by making more poor decisions by hanging onto stocks that aren't really serving you well. If you're in a stock like Telstra that was falling for 10 years, you're losing 62% of your money over 10 years, where you could have been in lots of other companies. So to me, given there's not a lot of money, I would just get rid of them, clean it up, rip the Band-Aid off, because it's much better for your psychology, and that's the most important part that we were talking about before earlier. It's your attitude to the market and your psychology. So I always just get rid of stuff, clean your portfolio quickly, and when we've had people give us their portfolios to manage, because we manage portfolios for people for $50,000 and above. That's part of what we do as professional traders. And when they give us their portfolio, Janine just goes through and just puts a red pen through a lot of the stuff that she doesn't like, and we get rid of it straight away, clean it up quickly, and get on with being positive and get on with making money. That's the important part.
Yeah, just to Dale's point, we will hold stocks if we think that they're okay to hold. Like what we're doing right now, we're looking at the stocks but doing a full analysis on them before we make a decision on them.
Do you want me to take that off you?
No, that's fine.
Right.
You've given it to me now, so you're not getting it back. Okay. All right. Now we've got EHE, right? So look at the chart on the left-hand side. That's the monthly chart. I do actually like this more shorter term, and it has actually traded out of the blocks. But you'll notice, because of the volatility of these types of shares, and this stock was from, who have I got here? I've got Richard Liu. Thank you very much for that. I'm not sure where you got up to, Dale, but Chili Dude said share trading's bad for my health. Michael Abbott says, ha. Richard Liu says, hi, Dale and Janine.
He wasn't laughing at Chili Dude, I'm sure that. He's probably laughing at me cracking a joke.
Hi, Dale and Janine. I've been looking at EHE, JHC. This is Richard. Both stocks look like they're breaking downtrend in both monthly and weekly time frame. Just like to see your thoughts on those.
Yeah.
So looking at those, you can see that in terms of the trend, clearly here we're actually in an uptrend on the weekly chart. So that's a clearly defined uptrend.
It's building that base, isn't it, to move up?
Yeah.
It's a bit more sustainable.
It's starting to move. It's moving more sideways on the monthly chart. It hasn't really given us enough of a strong move up yet. But we would have a trend line down there potentially. We might, depending on how far away it is. But the lower the price gets on these stocks, the harder it can be sometimes to fit the trend line. But notice the volatility of the share. So in one week, it actually traded up 45 cents and then lost half of that. So that's EHE. To me, at the moment, it's just filling this gap on the weekly chart. And, I'd say that there's reasonable risk with a stock like this, but it's been doing the right things of late. So JHG, similar sort of shape, big decline in Japara Healthcare Limited. Notice how healthcare stocks have been, they were all the flavour, like CSL, Sonic Healthcare, Ramsay Health, and there has been a decline more recently with these shares, and then over the past few months, the stocks have been trying to recover. So looking at the stock, you can see here that I'm looking at a rise up out of this low. So we've had a number of months up out of the low, but it's holding. So at the moment, it's still looking okay, and there could be a bit of a recovery. But if I was to put a trend line, which is what, again, we talk about in the book, down on this chart here, you would see that still on the monthly chart, it's sitting below that trend line. So you've got to expect, with a trend line, it's like watching a bouncing ball. It could hit it and then fall away.
We've got about 2 minutes left.
BKW. Okay, BKW Brickworks, monthly chart's been making higher highs. Notice the volatility on the monthly chart, really important to have a look at. And you can see that coming through on the weekly. We've seen a breakout recently of Brickworks. So a nice move, looks good. That would have been an ideal week there to be looking to get into it if you weren't already in this stock. But notice how you would have been thinking that you were a bit of a hero the following few weeks.
You would have been.
Trading up. This is the brain of the new trader that's new to the market. However, the market will tell you what's going on, and all of a sudden it took those gains away.
They always get in at the last minute, don't they?
Yeah, so this will really test your resolve and how much knowledge you've got when a stock starts to come back again.
Yeah, I talked about that on my report yesterday with some of those stocks where the volume was the highest volume was at the peaks of the runs on some of those low cap stocks. So if you haven't watched,
so they were selling out.
So, well, no, the amateurs were buying in only for it to see
and the big
fall
stocks
over.
were saying thank you very much. And it would have been interesting, wouldn't it, to see how many reports were going out at the time about that, encouraging people to buy it. There's a sceptic in me there.
One more stock, okay? This is your last one.
So
I know you want to sit here for 4 hours, but we have to go.
ABC. You can see how this stock has really taken off on the downside. We've had a big fall. Okay, so this stock has fallen about 40%. This is why these are not buy and hold type stocks at all. Every now and again, so back here in the GFC, we had the same sort of fall. Note, we're not in the GFC. The market has gone through a bit of a shift, and again, it's repeating the same sort of pattern. So it may recover from here. The first sign of recovery for this stock is going to be when it starts to trade back up through this high of the current month, which is 483. So that's the bare minimum I'd want to see to think that it's starting to move in the right direction. So There we go with ABC. You sure we haven't got time for one more?
No, we're already over time at the moment. I just want to briefly touch on Polo since he's put it up a couple of times. He's asked, how should I invest 35K in the stock market? It's not a question we can answer in a couple of seconds, that sort of stuff. It's just buy my book. That's what it's about. It's sharing you with whatever amount of money you've got, what kind of portfolio you've got. It's not about us saying, because I've had people say to me, if I got $1 million, what one stock would you buy? That's irrelevant. It's more about what's the process you're going to take, what kind of portfolio
what's the
do you
skill
want?
level that you've got?
Yeah, what's your risk profile? Are you high risk, low risk, medium risk? Is your outlook short, medium or long term? All that's answered in my book to help you understand how to get you into the market and create a good portfolio.
And how to do the money management's in the book as well.
That's critical.
That's really important.
It is, because I could seriously, and Janine and I could seriously get you guys to give us the stock tips, and we could manage a $100,000, $10 million portfolio, make money out of your stock tips, even with the knowledge that we know that most people have on this forum, because you guys are just going to throw stuff at us, and Janine and I will just use money management, real good money management, to protect our capital, because you're going to get one right that's going to go up, and that one we're going to run, and the rest of them will just get out really, really quickly, because what we're really good at is exiting stocks when they start to tip over and confirm that they're going to go down, and we're really good at making sure we're balancing out our risk and managing that all the time. So
that's the number one priority when we're managing client portfolios is to preserve capital.
Well, the number one thing that any trader or investor should be protection of capital. Number one. Anything else is irrelevant. Doesn't matter if you're just trying to pick the next best big winner is fraught with danger and will fail. You need to be making sure you're a very, very good risk manager, and that's really what you need to be. So we've had a lot of great comments about saying thanks for the show, all of those sorts of things. But yeah, thank you very much, guys, for looking at the show and being on again tonight. We've had our biggest audience, so thank you for that, for the guys that, or for everybody that's been on. Hopefully you're telling all your friends and everybody else and sharing it on Facebook and everything else, because the more people get on, the better it is. Janine and I are quite happy to keep donating our time to help you, the masses, but we do need your help because we do need to support us in terms of all the equipment, everything we're doing here, so please do that. One last thing before we go, I need to say, last week I mentioned I was looking for 10 people that are serious about being traders. That offer finishes in a few days. You do need to be prepared to take on our courses, because just
being somebody who's not educated is a really, really hard process for me to work with them, or Janine and I to work with them. You do need to be prepared to take on our courses, and that means you need to be really serious about being a really great trader. So that's I know I've had a few people.
Once you get to module 4 of the diploma, you'll get to work with me, and I'll really enjoy that.
You work with both of us, so you just steal most of them because you like them, that sort of stuff. But again, it's about you. You need to earn your right to be a great trader, and it's doing it the right way in the process. So
Dale will ring you up every so often and make sure you're on the right track, so you'll get there.
Absolutely. So that really does bring us to the end of the show, and once again, we really do hope you enjoyed it, and as always, we really do appreciate you sharing your valuable time with us, and we look forward to seeing you again next Tuesday at 7 p.m.
We'd love to get your feedback on tonight's show, so please send us an email to info@wealthwithin.com.au. Type in Wealth Within Live in the subject line. Also, let us know if you have a question, or perhaps there's a particular subject that you would like us to cover in next week's show. We're happy to take your requests.
Yeah, thanks, Jean, for tonight. I really do. I love being on these shows with you. As I said, I could be here for 4 hours, and I know you could be, but I know your husband and my wife would probably complain about that. So sorry, guys, but we do really get some great areas that we can assist you in and help people make more money on the market. So, and I'm sure everybody did enjoy your comments, but this really is the end of the show, so we must go. But before we do, make sure you like the video down below there, like it, and also you need to subscribe to our channel. It really helps us to keep delivering these for you. The more you subscribe, the more you like. It really does help us to get this show out there and get it to a wider masses, which really does help us. So do it right now while we're chatting about it, and it's because it's just as important. So, but make sure you do get online next Tuesday at 7 p.m. We'd love to see you again. So for tonight, goodbye, good luck, and good trading.
Good night, everyone.